Hello, everybody. Thank you for joining. Back due to popular demand. A couple of things real quick before I jump into what I call the Bitcoin demand side shock that's coming and the crazy accumulation. First of all, this is not investment advice. Second of all, please subscribe to this channel because I've got 3 more videos coming out in short order. One, I'm going to talk about the difference in Bitcoin and Ethereum and why you need to have a little bit of both. Number 2, Ethereum arbitrage opportunities that exist. And 3, investment strategies, how to take part of this whole Bitcoin revolution without actually owning Bitcoin. But if you have an IRA or 401k that's kind of conservative, I'll talk about some strategies there, as well as some other peripheral strategies that you can adopt to really take advantage of what's coming over the next 10 years. So, and in a 4th video, I'll talk about part 3 of all the valuation models for Bitcoin over the next 10 years. Actually, it goes out to 2037. But please tune in for those things. You'll find them very interesting. Every video will be short. You're talking less than 10 minutes, but we'll have life-changing information in them. Okay, as usual, I like to put all my thoughts down in a big mind map. And in this particular mind map today, I want to talk about, it is a very exciting time. We're talking about apex money, massive supply scarcity. Bitcoin is the only asset in the universe that has perfect inelastic supply. I'm going to showcase how a Bitcoin investment has completely radically changed one corporation. I'm going to also talk about the move from gold. I'm going to talk about the categories of investors that are out there and how that wall of money is going to hit this asset class. I'm also going to talk a little bit about democratization of information and how the small guy can actually front run Wall Street and hedge funds, there's never been a time like this before. Is one of the reasons I sometimes have problems sleeping at night, because it's all so exciting. Also, transparency. With Bitcoin, through things like Glassnode and others, there's no more funny games played by big institutions. Everything is there. Everything's on the blockchain. Everything can be analyzed and understood. Final thing I'm going to talk about briefly about is how sovereigns are getting in on the game. Iran, Venezuela, and now Cuba. So we're going to walk through this mind map in great detail. First of all, a little public service announcement. Many believe all of the Bitcoins could be gobbled up. It's a far-fetched theory, but I will showcase some information that actually makes it more credible than you would believe. Jump right into a little economics lesson. Now, I don't want to bore you all to death, but I tried to put together a simple graphic to help people understand exactly where this is going and why I call this whole situation a series of demand shocks because of the fixed supply. They're coming thick, fast, and furious, and these are in no chronological order, but let's zoom in for a second and talk a little bit about what's actually happening. First of all, the supply of Bitcoin is fixed. In fact, you could argue it's shrinking because people are losing their wallets, losing their hard drives, losing their keys. And that's why I believe there's a big push towards people taking their Bitcoin off of exchanges. That's a separate topic I'll cover in a future series. But for the average person, anything could happen to anybody at any given time. Imagine you get hit by a car, or you get hit by a pandemic and you become very sick and you lose your keys that way. How is your estate going to go on? How does your family take ownership of your assets? So just some things to think about. So let's talk about the major shocks that are coming. First of all, it all began with retail investors. Second of all, treasuries. Michael Saylor kickstarted this whole industry, and I'm going to talk quite a bit about him later on in this video. Family offices, they are beginning to jump in. I'm going to double click into family offices, why they are important. ETFs. Germany just launched an ETF. You've got Singapore, Korea looking at one as well as a couple coming out in the US marketplace. And they're going to basically make it a lot easier to on-ramp, onboard people into this whole space. Sovereigns, I touched on big countries like Iran trying to go around sanctions by leveraging Bitcoin. You've got your investment advisors. They're not at the stage yet really where they're pushing Bitcoin hard, but that's coming. And then gold bugs, people who have loved gold for the last 30 years, they are beginning to convert. Let's talk for a second about some of the hardcore skeptics that are beginning to convert. A funny quote from Peter Schiff was, What Bitcoins lack is their own fundamental intrinsic value. It's such a joke when you consider a piece of cotton paper in your pocket. What intrinsic value does that have other than being able to shrink every year? But four of the key names that have now turned after being almost violently against Bitcoin for a decade, you've got Peter Schiff, Ray Dalio, Nouriel Roubini, and Jamie Dimon, are all now at last embracing Bitcoin. That is huge. So the naysayers are shrinking. Even people like Jim Cramer from Mad Money, he's jumping on board as well. So let's talk a little bit about money. So 25% of all US dollars were created in 2020. Everybody knows that. If you've seen my previous videos, I would have touched on that as well. That was 7 trillion of printing this year. And rumor has it, another 7 trillion will be printed in 2021 under the new administration. What does this all mean? Well, just imagine you add another chunk of money to an existing system, inflation is going to happen. Money will devalue. Michael Saylor calls it a shrinking ice cube. Imagine you've got $1 million cash sitting in your bank account. That's going to shrink by 2.5% to 5% every year. And there's no getting around that. And that terrifies a lot of money managers and entities and institutions and pension funds. They have to find a way to overcome that shrinkage. The other thing that's happening is the traditional hedge against inflation was always gold, sometimes silver. But now they have this thing called flippening. And this is very interesting. Just over the last 30 days, $7 billion has flowed out of gold ETFs and $2 billion has flowed into Bitcoin. Again, it is staggering in just 30 days that this has happened. Now, Bitcoin is not reaping all of the advantages, but they're getting a pretty good share, and that will only increase as we go forward. So you're beginning to see that gold is no longer the perfect hedge against inflation, but people are beginning to wake up and realize that Bitcoin is. Let's jump into one of the major categories of investors. This is a group called family offices. This is really just for illustration purposes only. Family offices in the US own over $4 trillion of assets. Today, 3.3% of that $4 trillion is in gold and 0.18% is in Bitcoin. So kudos to them. They have at least some element, some kind of toe in the water into the whole Bitcoin asset class. But as you saw from the previous slide, there is a move out of gold. Where are they going to go? So if you imagine very easily $120 billion of this $4 trillion will very easily flow into Bitcoin, and that will 4x the price in short order, which again is staggering to believe. Again, also reminding you that was only one category of investors. The other thing to stress is we are still extremely early in the adoption of Bitcoin. It is estimated between 1.4 and 1.7% of people on Earth have embraced Bitcoin. That is tiny. That is less than 2.5%. It's estimated that by the year 2030, 90% will have embraced it. So just think of the network effect and the impact on the price of Bitcoin from this move. Now, we all know the demand for Bitcoin is way higher than the actual supply. That's very clear. And you take firms like Square and PayPal and Grayscale Bitcoin Trust, they are consuming way more, multiple factors than is being mined on a daily basis. The question is, who is selling? Because anybody who knows Bitcoin knows the future is very bright. So we're still trying to figure that out. Some people believe the people that actually owned Bitcoin in 2017 when it hit 20,000 nearly, they're selling now to recoup their money. Others believe there's some big whales that are just selling some stuff. Some believe some big mining operations are selling to cover expenses and build out scale. So that's kind of where they believe the supply is coming from and preventing Bitcoin from going to the next level. However, that is going to stop pretty soon, many believe. So let's talk about another interesting piece of news that came out late last week. Mass Mutual, from the insurance industry, the most conservative of all industries, dropped $100 million into Bitcoin. If you imagine 1% of all the treasuries held by insurance companies goes into Bitcoin, that's $600 billion. That in itself is staggering. The institutions now are saying, the big guys, the JP Morgans, the Fidelities, that the institutional influence on Bitcoin will grow as the bull case becomes clear. The bull case could not be more clear, in my opinion. Global banks, European banks, Chinese banks are all jumping into the fray. And I just talked about the insurance industry. The most conservative, the most risk-averse are doing it. That turned all industries' heads, I'd imagine, late last week. Microstrategy case. This is very, very interesting. Again, my first video was triggered by the fact that Saylor went in and dumped all of his treasury assets into Bitcoin, $450 million. He dropped another $50 million a few weeks later and just raised a convertible note, raising $650 million to buy Bitcoin. I estimate that by the end of this week, he could have 70,000 Bitcoins on hand. That is staggering. But just imagine, just this past weekend, Microstrategy made over $70 million in gains on Bitcoin, okay? 70 million bucks, basically in one day this weekend. Where can a software company like them make 70 million bucks a day? By the way, to put that in perspective, $70 million is 35 times what MicroStrategy earned for the full fiscal 2019. Michael Saylor is beginning to look like a complete genius now, despite all the naysayers. And people are still saying, what is he doing? Is he becoming a de facto ETF for Bitcoin? No, he has money on hand. He has the opportunity to raise money at a very cheap price. And yes, why shouldn't he do it? Because 5 years from now, if Bitcoin 5x's, 10x's, he's going to look incredibly smart. Another key point, again, back to supply. Just want to talk about this for a second. Anthony Pompliano states that 66% of Bitcoin has not moved in over a year. That means there is only about 6.5 million in supply available. Zooming into that sheet, just so you can see, the Pomp supply, 35%, is about 6.5 million. When I crunch the numbers, my quant estimate of the remaining supply is about 7.6 million. And I arrive at this by pulling out the amount of treasuries that have locked up Bitcoin, the Satoshi lockup of about 1.04 million coins, the coins lost forever, 3.9 million coins, or 21% of 18.5 million, the amount that's been locked away in cold storage, which is very easy to pull from Glassnode. So the coins available, in my opinion, today are about 7.6 million. So between Anthony Pompliano's 6.5 million and my 7.6 million, imagine there's approximately 7 million out there in terms of supply. It's very easy for that supply to be gobbled up, hence driving up demand in very short order. Food for thought. There are 50,000 corporations on Earth, not necessarily like MicroStrategy, but 50,000 companies out there. But there's only enough Bitcoins for 100 similar sized deals to MicroStrategy. That goes into the extreme scarcity of this asset class. I'll repeat that again. Only 100 companies can do what MicroStrategy have done. And that's just one category of investor that's going to take all of the Bitcoin. And again, the wall of money is going to hit in 2021. But why are all the coins gone? I will leave you with that thought. Thank you, everybody, for your time.